The decline in retail petrol prices follows heavy falls in the broader commodity market, with raw materials from copper, iron ore, timber and wheat falling sharply in recent weeks on concerns major global economies cooled slow. Nick Kwolek, founder Kwolek, joins us for more on the commodity market watch. Nick, it's always great having a conversation with you. Just looking, could the market volatility boost commodities? And if so, what commodities gain and what commodities are likely to lose out?
Hi, Fiona. Thank you very much for having me back. So, yes, as you hit the nail on the head there, there's a huge amount of volatility at the moment. You mentioned that we've seen a sell-off in a lot of commodities. I think a lot of that was linked to the wider rout in equities, bonds, across the board. You had a lot of the large funds that play extensively in commodities just de-risking and taking risk off the table across all asset classes, and commodities was one of them. Having said that, we've really seen a big jump back up in commodities in the early part of this week. Oil dropped to $95 a barrel last week, and we're back up to $105 this morning. So, I think, looking, at what you've pointed out, you've got commodities such as cooking oil, palm oil particularly, that have fallen sharply. You had an export ban in Malaysia that caused a huge build in stocks, and then we've seen a huge sell-off of about 45% there. But other commodities, yes, we've seen falls across the board in grains and energy. But at the end of the day, we've seen a big jump this week, especially in European, corn and wheat futures, because with the war in Ukraine and Russia, there's still an underlying problem. And if you look at the destination markets, cash premiums are still very, very strong. So you may have a sell-off in futures, but actually the underlying demand and the cash premiums are very strong. So yeah, really, it's quite a split across all commodities at the moment.
Yeah, and bringing back to the region, how are the agricultural commodities going to be really impacted by this? We're seeing corn fell 3%, sugar also lost about 0.3%, and coffee decreased by 9.4%. How are the different agricultural commodities here in the region going to be affected?
So, one of the very strong issues for the region is and I think, we'll probably talk more about this, over this interview, but the dollar liquidity crisis is real, and it's hitting African commodities particularly hard. And if you look at the Kenyan shilling, it's lost roughly 25% against the US dollar in the last 18 months, and is every day is hitting fresh lows against the dollar. Off the back of that, you're seeing coffee, sugar, and wheat prices staying stagnant. Excuse me, but in the broader scheme of things, on a dollar perspective, the commodity is getting lower and lower and lower because you've got the underlying local currency that is devaluing. So it's a very strange situation in that you've got stagnant prices in the region, but a strong dollar. So net, when you're importing products, you actually have a real fall for importers.
Yeah, and now just looking long term, how will the commodity market really be impacted by the volatility that is being experienced within the market today?
So, I think, as I said in our last interview, the volatility will continue. There's still a huge amount of unknown with the war. People say that oil can hit $160 a barrel, but then oil can slump to $65 a barrel. I believe with there's a lot of talk about net zero and the green agenda. To get there, you're going to have to burn a lot of hydrocarbons. So I still think that demand for oil, which is obviously one of the base underlying commodities, is going to be very, very strong. And as I said, that fundamentally there is still very, very good demand for products, and essentially you have a tightness of supply in the physical markets, which should keep prices pretty firm going forward, despite the fears of recession globally.
Yeah, and now just even looking at, you've touched on the dollars, just looking at the currencies, drawing from the monetary policy as well as the recessions that are currently being experienced, how will this continue to shape the agricultural and commodities sectors? And right about now, what should governments be doing, especially in regards to the monetary policies, in able to just be able to hold the inflations as well as the volatility within our brackets?
I mean, I think it's very, very difficult because, we're in a paradigm shift in the way that money flows around the world. People have said that the US dollar has been dead millions of times, but the US dollar is very much not dead. It is still very much the global reserve currency. And in hard times, people flood back to the dollar, and the demand for dollars is extraordinary. The dollar liquidity index is, I think, at one of the highest levels ever. People are flooding back to the greenback and dumping other commodities. And, essentially that means that, you're going to have, for Africa, as well as a lot of the rest of the world. I mean, if you look at sterling dollar, I mean, that, we're at 118 today. We were at 143 only 3 months ago. So it's not just African commodities that are being hurt. It's global commodities it's global currencies that are suffering. And, what can governments do about that? The answer is very, very little. When there's such strong demand for dollars, intervention, which is being tried all over the world, is just proving fruitless at the moment. And until, we see that demand for dollars start to ease, which I personally don't see easing anytime soon, I think there's very little that can be done. And I think there's very little that can be done about inflation. This is a truly global thing, and it stems from, a lot of excess over the last 15 years since the global financial crisis. And we're all, unfortunately, now paying the price for it.